It's still strong. It's buying 94 US cents, 68 euro cents and 56 pence sterling.
Now, for more on finance, we're joined by Rod North, Executive Director at Bourse Communications. Rod, good morning.
Good morning.
Rather volatile stock market we're seeing at the moment?
Very volatile. I think we breathed a sigh of relief this morning when we saw that the Dow pretty much regained all the losses of Friday, so a rise of 146 points. So there was a fair bit of nervousness about it because the Dow actually was getting awfully close to that 16,000 figure and potentially looking as if it would go below that. And I think a lot of concern in the US at the moment is we're just in the middle of, or the start of the reporting season, and JP Morgan came out with a result on Friday which wasn't very good, which took their result, down quite substantially. But yet last night we had some good results coming out with Citigroup, retail sales in the US sort of powering ahead as well. So the market's pretty skittish at the moment, and I do think that the market overall, particularly Wall Street, is very high, and I know there's been a fair bit of talk by some well-known gurus about where the market, share market might go in the future, particularly the US market, because it's much sort of higher than our market has got to, because we still haven't got back to our previous high achieved back in late 2007. And I do think that the share market and its outlook could be a bit of the elephant in the room for the Reserve Bank too, if we see Wall Street get a bit skittish over the next few months. But yet, if we've got good results happening out of the US and the recovery continuing, that should keep the market on an even keel.
Now, the minutes from the latest RBA board meeting are out today. Are they expected to shed any more light on the bank's intentions?
Well, I think it's still very much steady as she goes, and the Reserve Bank's got a sort of neutral stance at the moment, although we have been seeing some positive signs, particularly on the unemployment rate coming off last week from 6% to 5.8%. One of the key things I think the Reserve Bank will be waiting for is that inflation data, which is out after Easter. I think that will be a key as well. But my view has been that I don't think the Reserve Bank's going to be doing anything anytime soon. I think there's too many other things, and particularly with the dollar up around 94 cents and potentially going higher, the last thing the Reserve Bank wants to do is put rates up, because that'll only put the dollar up even higher.
Now, the Financial System Inquiry's heard an interesting submission about just what responsibility major banks should play for their great control that they really do have over Australia's financial security.
It's been quite interesting because the AMP put a submission out yesterday basically saying the concern it has is that the banks, the major four banks, have got a very unique position, particularly on funding, and their belief is that they actually should be charged more because we've seen, particularly the regional banks complaining that they have to pay a lot more for their funding. So, the major four banks are in a very unique position there, and the concern, I suppose, is if the banking system got into any sort of trouble, effectively to sort of wipe out our entire federal budget because of the size of those banks. So they are very big.
But it's a not expected doomsday scenario,
It is not an expected doomsday scenario.
It's a little bit of a slug them.
Well, slug them, that's right. But, I mean, we're getting slugged a bit too, because one of the things that Bermuda, all of us, if we've got credit cards, I still can't believe when you've got a cash rate of 2.5%, we can still be paying over 20% for credit cards. Can someone please explain that one? I've been in the finance industry a long time.
The profits of the big banks, and you've got your answer.
Yeah, there's a bit of garnishing going on there.
The last line of defence, isn't it? Yeah.
That's right.
All right, it was always good to see you, Rod. Thanks
very
so
much.